Here, all relaxed here.
Mhm.
All right. With that, we'll call the meeting to order. The roll call of attendees is Rob Mara, Steve Ham, Bob Mushin, Andrew Morgan, Stephanie Manchester Wilkie, and Roger Lord, the last three remotely. In addition, we have three members of the UBS team, Mark Shagoski, David Sears, and Ashley Martello. The first item of business is to receive the UBS quarterly review and outlook. Gentlemen, if you proceed with that, you can see some of us. No, you can see all of us. We can't see you at the moment.
Well, I can't see Rob at the moment.
All right, good morning.
Good morning.
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 Everybody's healthy, doing well.
I assume your forecasts are already obsolete.
Well, no, we're just telling people they should either be drinking champagne or tequila after they decided whether it's good or not. No, the good news this morning is Pfizer has a vaccine that will probably be available by December and has 90% efficacy. So the markets are up 1,600 points on that news across the board. So I don't, and some of our predictions or guidelines are pretty spot on right now. So David, you want to kick it off?
Sure. And just to, everyone has the presentation and I'll just refer to the page numbers on the bottom right. Is that okay?
That would be great. Thank you.
Okay. Okay, so thank you. We'll do a brief kind of look back, what's happened in the third quarter, and then just talk about going forward. Obviously, like you said, things have changed pretty rapidly. So if we start on page 5 of 55. And, you know, a little bit of this is stating the obvious, and that is, you know, the third quarter we saw a record rebound in economic activity, but that's coming off of a record low, right? And so there's been this extreme kind of pullback and then bounce back, which was expected. I think the big question mark prior to when this was published was, what is the trajectory to get us back to normal? And so if you just look at this this chart, which is a little messy, you know, a normal, this is job losses, and so the red line that extends all the way out, that's the financial crisis back in the last recession that we had back in 2008, and you can see it took 5 years essentially to get back to normal. Now that was a little bit different because there were structural issues that needed to be worked out. So all the way to the left is this gray line, which is today, right? We have this extreme drop off and now this extreme bounce back. How quickly do we get out? We don't think it's going to be 5 years to get back to normal, but the big question is how long? And so everything that we're going to talk about today is really about what's the framework to getting back to normal? How long is it going to take? Is it the begin? Is it the middle of next year? Is it 2022? And that will essentially dictate what the markets do. So if you look at just flipping to page 7 real quickly, our outlook going forward was that this recession that we're kind of working through was going to be deep but short-lived. Why would it be short-lived? Well, there's a tremendous amount of stimulus being thrown at the problem. That stimulus comes in different forms. It comes in low interest rates. It comes in checks to people, and that's the big question now. We are expecting, even before the election results, expecting a second stimulus package to come before the end of this year to hopefully get us through. The big question was, okay, get us through to when? And I think this morning, there's definitely good news that when is potentially sooner than later. So that is kind of obviously very fresh news. So page 8 is now focusing more around kind of this vaccine and the different scenarios. So the central scenario was vaccine became available in the second quarter of next year, and social activity normalized around the same time, and then the economy got back to the GDP level of the economy got back to pre-crisis levels in 2022. Now, obviously, it could have been worse than that, could be better than that, but this was the framework. And so when we take this and just translate that into the markets, that's on page 10. Okay, so let's just focus on the top line, the S&P 500. So that central scenario where the vaccine was going to come, or at least be widely distributed by Q2 of next year, put the S&P 500 at 3,700. Right now it's at, with this rally pre-market, it's like 3,650. So what that's, and before this happened, the upside, which would have meant better than expected or quicker progress, would have put the S&P at 3,900 by, and I'm sorry, that's by June of next year, so the middle of next year. So you can see what, as Mark alluded to, these kind of projections were somewhat, at least provided good guidance as to what the markets would do depending on how things played out.
So
Obviously things can change, but yeah, these are good guidelines. Go for it, Mark.
to what David said, yeah, the forecast that we had the second quarter for the economy to get back on its feet, mostly through tracking, not through a vaccine this quickly, but the vaccines change things. I kept turning to the left. I was looking at the CNBC screen because what's happened now is a flip-flop in where the market is. Peloton, Zoom, Ruth Chris, Amazon, Electronic Arts, all pandemic-related stocks are down 2 to 3%. Marriott, Wyndham, which are two hotel chains, are up about 3% right now. So things have changed around. If this vaccine works, it will stop one of the things that was our personal fear was in the first quarter, we weren't going to have a recession that would have been a Wall Street recession. If you remember in 2008, it was all the banks and financial institutions around the world that were in trouble. This go round, the banks and financial institutions are supposedly in good shape, but we would have had a Main Street recession, which is starting to unfold. I can do a local, which I'm sure is happening in Rhode Island. The mall that where we go food shopping that I've gone to for over 30 years has a shoemaker, a nail salon, and a massage envy all next to each other, next to a dog food place. I went into the pet store yesterday. He's doing really well. And the other three businesses will probably be out of business by the end of this year. So we can't wait to get this pandemic vaccine because it may stave off what would be a Main Street recession of restaurants and service workers at this point. We know that there are about 13 million people to be laid off at the end of December in the hospitality industry unless this vaccine actually works. So sorry, David.
No, I mean, I think that's what I had to cover, because really the election, regardless of the outcome up until the election, we thought the bigger news was the vaccine. The election, it's good to have clarity, and the markets generally like split government, which looks like that's the way it'll be. I mean, it's not final yet. There's still some Senate seats up in the air, but if that's the case, then we are looking at a series of several events that will continue to support, risk assets, as we call them, to grind higher. As you know, nothing goes in a straight line, but longer term, we do think that's where the value is going to be made.
Ashley, any comment?
No, I think, to the comments of David and Mark, obviously this is, a real positive, the news today. And, we are seeing a substantial rally in more cyclical areas of the market that have lagged. There is a sense that vaccine was a step one that will cause some, more confidence for the, average consumer to get out there and do the things that they normally would have done. And the expectation is that it would have taken some time, and it's still going to take some time. But, I think this is a real positive. And hopefully if we do get a widespread vaccine distribution by first quarter or second quarter and next year, we start to look more like the more optimistic scenario there, which I think the market is starting to realize is a real possibility.
Any questions before we go into the performance in the portfolio?
With in regards to the market, where does it put the,
Rob, if you could use the microphone so they can hear you.
so in regards to the market, where does it put the PEs for the projection? What
Yeah.
the price earning ratios are being projected?
Yeah, that's a good question. Rob, I personally don't have an updated number, but an educated guess would be somewhere around 21 or 22 forward earnings, which isn't cheap. But the argument there is that lower interest rates justify higher PE ratios.
Thank you.
Yeah, well, one of the other things I'll mention too, so that's an average PE ratio for the S&P 500. So a lot of that is skewed by some of the higher valuations of the technology names. But if you look at some of the other areas of the market, whether it's materials or financials or energy or some of the industrial names, they're not trading at quite as high a level. And the other factor is there is some earnings leverage in these names in an open economy. So, even though the PE ratios may seem a little elevated in some of these areas, there's also some potential for significant earnings upticks if we do have an open economy. So, that's something to consider. The other thing to consider is the non-US parts of the market are not as expensive as the US counterparts. So whether you're looking at Europe, whether you're looking at the emerging markets, there probably is some room there for multiple expansion.
Thank you.
Sure.
Yeah, and you're seeing that today. So the futures are up very big. Dow's up almost 1,700 points, but so that's about 4.5%. But tech, the Nasdaq, is only up about 1.5%, which then would mean value's got to be up, 6 or 7% today. So that's kind of what Ashley was talking about. Those economically sensitive names have not rallied and are still arguably cheap. So you can see kind of the money just moving to a different section of the market. Okay, so we'll go into the portfolio performance starting on page 11. And we have some updated numbers from this because this was published on October 29th. Through October 29th, the year-to-date performance, so calendar year, just slightly positive, 0.28%. Before today, that 0.28 was a 4.56, so last week was a good one. And then today, we don't know yet, but I would imagine that it'll possibly go, over 6% or so, depending on how the day ends up. So that's pretty positive for the year. Page 12 is the asset allocation, and we are in 12.15 million. We are very close to our target, which is 35% in fixed income, 65% in equity. Okay, so even with a rally, we're pretty close to where we want to be long term as far as allocation is concerned. Now, we'll just quickly dig into the portfolio components, which are on page 17. Now, these numbers are through September 30th. And the one change that was implemented, we removed an underperforming manager in the growth space and added a Vanguard growth index fund. Okay, so you can see that is the third line down, Vanguard growth, started in August, and the performance is all the way to the right, so 2.77 versus 2.7.
Yeah, good.
There are some very even, some good highlights here. Kane Anderson is a small cap manager, outperforming by a very large margin. So that helps. You could see the small caps are still down 8% for the year, back in September, but not our small cap manager. So definitely some good strong performers in here to offset the one that we replaced. So if you skip to the next page, what bottom line, essentially, this is again through September, so it's a little older, but in that quarter, the portfolio outperformed 5.18 versus 4.7. So
I have a question.
Sure.
What do you think is going to happen with the real estate, the REITs and all that? We have, what percent, 9%?
no, it's 2.3%. So it's a small allocation. So there's a couple comments. REITs are diversified. So certainly to the extent they have office, that's going to be a drag on their portfolio. But a lot of REITs have diversified into industrial or storage. So there's that. There's also low interest rates, which will help REITs in general. They're interest rate sensitive type of investments. So there's mixed forces in the REIT space in general. But Ashley, I don't know if you have anything to add to that.
Yeah. I mean, I think, when you look at REITs, you have to look at the specific areas. And one of the things we hope is that Cohen is focusing on those areas that can, navigate the pandemic better than the overall averages. But one thing's for sure, the news on the vaccine is nothing but a positive, and it may take some time for the world of office real estate to play out. And it may be the case that it is changed on a secular basis, given the new technologies that we have that allow people to work from home. But, our hope is that this news is a positive there, and that Cohen is able to navigate it. And, what you've seen here is that, despite being negative, they have significantly outperformed the index. So that leads us to believe that, they're probably more focused on the industrial areas, possibly, anything that has to do with cell phone towers, which are a growth industry, and lowering the exposure to some of the hardest hit areas.
Good, thank you.
Sure. Mark, you're on mute, I think.
Yeah, I was gonna say, I can see you talking, but we can't hear you.
I'm sorry, yeah, I put on mute, so I wasn't getting any feedback. I apologize. Back in June, we had Mike Ryan, the chief investment officer of UBS Global, talk to one of our clients' boards, a Fortune 100 company, and the question came up about real estate then, because a lot of the people on the board either have REITs, own real estate in big cities. And his answer was, we went back and did a study for every pandemic that ever occurred. And he said, if there's a vaccine or tracking mechanism before the end of this year, the real estate will turn around very quickly in the larger cities. If we went into the next quarter of next year and there wasn't a vaccine or tracing that made a difference, then the big cities would be in trouble. So I think you'll probably, if the vaccine proves to be what it's supposed to be, the announcement today, we'll probably see this stabilization in some of the bigger cities. There will be office space in the marketplace, because a firm like UBS already said they're not going to take the same footprint size or rent as much real estate in big cities. They're going to drop it by 30%, and so did other major corporations. But real estate should start to stabilize if this vaccine is proven effective.
Thank you.
Okay.
So we don't have any manager recommendations right now. We're happy with the performance of the existing managers, and we also don't have any allocation recommendations right now. So this is
Understood, yeah.
And we get to ride this one out with the market going up probably into the end of the year, unless there's another big surprise.
Yeah.
Yeah. I guess the unfortunate side of that is that the actuaries' target date that they will use is 30 June. So we won't see this, but we'll be able to better evaluate our contribution for the FY22 budget, given that we get that, we'll have that market experience in a couple of months.
Bob, on that comment, do you want us, is that the pension's fiscal year to the extent that you want us to add a column so you can track performance around that June 30th date? Because we can do that if you'd like.
I think that would be helpful. I think because it often comes up in our conversation as to, you know, we can go back and find it, but it would be helpful to have it there.
We can put make June 30th and have it the full 12 months. So like now we'll accrue 5 months of the year.
Right.
So we'll have a column that have 5 months since July 1st. So we have a good read each month.
Okay.
Okay.
Yeah. That would be, because what happens is we take the actuaries' recommended annual required contribution, which the state of Rhode Island watches us carefully to make sure that we do. And it's helpful for us to know if we have, if market performance would indicate that we can be either more aggressive, or perhaps don't need to be as aggressive in our allocations in the budget. All right. Don't want to be in a hole. Gentlemen, anything else that we need to know?
We haven't been there in a while. Any big new concrete houses going up, or only the one still?
The concrete house is for sale. Yes.
Is it really?
8 million.
Yeah. So if you've been looking for a house in Little Compton and you have your 8, this is the sort of place for which the discriminating buyer will be needed.
Okay.
Yeah. Well, thank you very much, and thanks for this package. It came through just fine. Everyone got one, and I'll be able to provide them additional copies if need be. So I think this process worked very well.
Okay.
Can we get colored copies? Or
Yes,
not?
sir. I'd be happy to do that. I just didn't want to run them all off.
I'll just take it electronically.
I did send it to you. Oh, okay. I'll send it to you again.
I'll look.
Yeah, yeah.
I'll look at my.
Yeah, I saw it electronically, but I don't know that it was color.
It is. The digital version is color.
Yeah.
Oh, okay.
Yeah, I sent the PDF out. I also used the printer. I don't know why it didn't print in color now that I think about it, because we now have a color print.
We have to tell it.
I have to tell it. I didn't tell it to print. I'll get smarter every day.
Yeah. If you're looking for that email, it was from the 2nd.
Anything else on the agenda?
Yes, I just have 3 items to talk about.
Thank you very much, gentlemen.
Thank you.
Thank you. Take care, everyone.
Hold up, please. Members of the committee, I need votes on 2 things. But
Right.
as far as the UBS members, thank you for the presentation, and we'll look forward to speaking with you soon.
Okay, thank you.
Thanks so much, everyone.
Everybody.
Take care.
Take care.
Bye.
Bye.
Bye, everybody. Bye.
Bye now.
Happy holidays.
Same to you. Bye.
The next item of business is to acknowledge 2 municipal staff retirements. Beth Ryan and Mary Jane Harrington have retired. The net impact on the pension outflow is $5,200 a month. So that's a significant difference in terms of what we'll be paying out. Both of those retirements came in the latter part of October. Their first payment.
What? No, I'm in a meeting.
And they won't get it until a makeup, probably mid-month. Both of them are aware of that. The next item of business is to approve the payment of the invoice from the actuary for the purposes that I just described, calculating their benefit calculation. I would entertain a motion to approve the payment of the invoice. I'll make a motion to approve.
I'll second the motion.
Watt has made the motion and Morgan has seconded it. Is there any discussion? I'll take a roll call vote. Committee member Morgan, how do you vote?
Aye.
Lord?
Aye.
Manchester Wilkie?
Aye.
Watt? Aye. Ham?
Aye.
Mara? Aye. Mushin? Aye. The vote then is 7-0 to approve the payment. Finally, the minutes of the 14th of September, notice that they've been modified to accommodate the fact that this meeting occurred at a time we didn't realize we would be doing it when we wrote them. I'd entertain a motion to approve the minutes as drafted.
I'll make a motion.
Second. Motion by Mara, second by Watt. Is there any discussion? Roll call vote. Morgan.
Aye.
Ward.
Aye.
Manchester Wilkie.
Aye.
Watt. Ham.
Aye.
Mara. Aye. Mushin. Aye. Having no further business, I declare the meeting adjourned. Thank you.